Yo guys, what's going on? Welcome back to another weekly forecast. In this video, I'm just going to be breaking down Nasdaq. Just going to give a forecast on Nasdaq, what I'm expecting next week and what sort of happened last week, and just breaking down my thoughts on this week. So you can see already that our predictions for price to break out the prime monthly high already worked out. We are expecting for price to give us a pullback back into this range right here, and for price to then break up and take out the prime monthly high, which is what I did. You can see that we did that with CPI. You can see, look how close, right? Price ended up pushing towards that prime monthly high with CPI release, which is right here, right? Now, when you see this, where we have a key target at the top here, and then with news release, price ends up pulling just short of that high, then you can see that when price gave us a big extreme pullback back down here, that 10 a.m. candle did then just push price all the way back up to take out that high. So this engineered liquidity for sellers to step in, start placing their stop losses above this high, and then price ended up doing a full V-shaped reversal, pushing back above that prime monthly high right there. Now, with that being said, after going into sort of Wednesday, Thursday, you can see we ended up getting a nice move on Thursday where price tapped back in to this imbalance. Now, again, as I said, the market wants to deliver price efficiently as possible. So, of course, our next target above here was a pullback into this 1 hour fair value gap. Now, after that, as I said on my free Telegram, I was expecting a sort of bullish move, a bullish reaction off this 1 hour fair value gap. Now, I was saying that this 1 hour fair value gap was quite key because it's not like, this fair value gap was the fair value gap that was created when price took out the prime monthly high. So if price wants to continue, it should hold on this 1 hour fair value gap here. So if price wants to continue higher, we are expecting for price to hold on this to continue up. This is sort of key support and resistance here, but using imbalances at key levels, not just imbalances at random places. Like, say for example here we have an imbalance. This imbalance again is not as significant because it wasn't an imbalance. Yes, it may have broke out to the downside here. However, when you sort of have time-based levels such as prior daily highs, prior daily lows, prior monthly highs, prior monthly lows, and so on and so forth, then they become sort of key fair value gaps, and you can use this across all assets. So that's a little nugget there for you. So yeah, as you can see here, like, look at price, how it just tapped into it and immediately went back to the upside. Couldn't catch a buy move here. I ended up missing this because this ended up pushing at 9:30. Half the move was already done. Then price sort of just started consolidating, and then Friday price ended up pushing back lower into this range. So that was pretty much it. Also we had daily SMT on Friday. So again, with all the Trump speeches going on as well, it wasn't as clear what market was going to do, because you can see we had SMT here. So if I also open ES on the other side, you can see that when you have this sort of SMT where prices, you can see that prices are making a lower high on this side and also made a lower low on this side, which is indicating that the market is moving lower, right? Now, on the other side, on a correlating asset, we have a market that is moving higher because it's making higher highs and higher lows. So when you get this double SMT on either side, this is when you sort of want to stay out, because you don't know which one's actually telling the truth. Is the market actually moving lower, or is actually the market moving higher and being manipulated? So we don't really know. So you can see over here, nothing really crazy happened. Price just sat into this 1 hour fair value gap and stayed there. Now this leads me on to our next week's forecast. Obviously, we're going to start off by looking at the news for next week. You can see that we have FOMC meeting minutes, nothing major, this news event. So we're just going to ignore it because nothing really crazy happens on Wednesday. But if you end up, price could use this 7 o'clock news as a volatility injection to push price where it needs to go. So bear it in mind. Yes, fair enough, it's not a busy news event. However, these news events, these red folders, are used as sort of volatility injection into the market when it requires it. As you can see here, this was required on CPI, where CPI released, it pushed back down and then pushed higher, and also with unemployment claims right here, where prices pushing up, unemployment claims was used to push back in to the imbalance, and then price then reacted based off that. Now, again, I use the red folders, use these news as volatility injections. I don't really care too much about the values that these news events create, i.e., the CPI rate or like the unemployment claims specifically. You want to use, where price is, because price could be very bullish for US, for example. Yeah, the market will move down. So this is where the technical analysis aspect is sort of king as usual. I've been doing this for 2 years, and I've always noticed the fact that if you just look at the charts and focus on the charts, don't forget about the numbers. Forget about the numbers. Maybe if it's a significant rate increase or something like that, then fair enough. Yes, you have to use a bit of knowledge around fundamentals and gauge the market and engage the order flow. However, the order flow is still key regardless. So you can see that as the market moved back down, it immediately moved back up, and you can just use that without even looking at the news. So that's just a little point I would like to give you there, because I do know a lot of people just always say that, but US is bullish, or this is bullish for gold, for example, yet gold's going down, what's going on? I'm just saying that, look, news confuses people, but it's used for big volatility injections to get price from point A to point B, where it needs to go very quickly. Now, what it was used with CPI was it was used to clear out that prior monthly high. You can see that with CPI, price clear that prior monthly high. So that was that manual intervention where price needed to go from point A to point B, and now we're just in this range now. So anyway, go back to it. Unemployment claims, flash service, PMI, and then we got Chair Powell speaking on Friday. So the start of the week might be a bit slow, but the start of the week will tell us what this rest of the week will entail, because at the start of the week, if you think about it, we're back where the weekly open is at the moment. The key levels that I'm going to mark up are going to be the prior weekly high. These are what we can use to start off a week very clearly, right? Is we have the prior weekly high here, and then we have the prior weekly low here, right? So these are two levels that we can sort of target, but understanding when market is going to do that is going to be the key. Yeah, the prior weekly high and the prior weekly low here. Now, price is holding at this imbalance. Now, if price stays in this imbalance and respects it and starts to push higher, back above the prior monthly high, price will start to target all of these highs that were left and then go straight to that prior weekly high. Why? Because order flow is still bullish, as you can see here, and price is holding at imbalance levels, and this is all engineering of low resistance liquidity, can't speak. Because if you can see, and it's marked up with a trend line, then the price will likely want to target all of that. So that's what I'll be looking for on a Monday, Tuesday, to see if price respects this 1 hour fair value gap and closes back above it, or just creates some sort of, as long as it doesn't close below it, that's what I'm trying to say. As long as it doesn't close below it, this setup is valid. Now, going into the second stage, where if price closes below it, as long as price does not close back above, this will be used as resistance to push price lower back into the prior weekly low and potentially into this fair value gap where price was holding off there. You can see that we have relatively equal lows here, potential low resistance liquidity right below the CPI lows that we have from here, 10 a.m. and all of these lows are that day of Tuesday. So I'm going to take it step by step, simple as that's how we read order flow. It's sort of a step-by-step flow. At the moment it's respecting this level. We haven't had a close below, so we'd like to see what happens on Monday. Perhaps Monday may even open up here and we get some sort of retracement and then price pushes up. So very, very key stuff at the moment. So price is above the prior monthly high. We are trading above it, but you got to remember, we have had a very, very bullish impulse from the start of August. Now, I wouldn't be surprised if price starts to rolling over here and then starts to attack some of these lows. But again, we'll only start switching our bias to a sell program once price closes back below this. Price is still here, so price could still be in the buy program. The reason why I'm saying that price could switch to a sell program is because the main draw on liquidity has been met, which was the prior monthly high. Now, if price is done here, we just need to see price close back below, and then we can start seeing price start fall over into the sell program, and this will be a sort of market maker sell model, as I use quite often, or this could be the market maker sell model. As you can see here, original consolidation right there, your consolidation, price pushes up, clears at a key point of interest, taps into, say, for example, the 24,000 level, as you can see in terms of price, and then price is starting to roll over. This is the confirmation area which confirms that we are in the smart money reversal, and then price will attack these, original consolidation, and then the draws and liquidity, which will be the lower end of the market spectrum right there. That's pretty much it for Nasdaq. I don't think I have any much else to say other than the fact that just take it step by step, and hopefully you learn from these weekly forecasts in a way, because I do drop certain things that I've been picking up myself when trading the futures market. I'm not going to waste any more of your time. Just keep it there. If you guys stay to the end, don't forget to comment, like, and subscribe as per usual. 3 links are all in the description. It's been Oasis FX. Peace out.